Joining me now with more is Mark Newton. He's head of technical strategy at Fundstrat. Mark, good to see you this morning.
Thank you, Kristen.
Have the technicals changed in the market since this news late Sunday?
Nothing really in the last week. We have seen a little bit of consolidation, of course, since the beginning of November, a little bit different than how we normally expect November to play out. But, remember, August, September, October were all quite positive, and so this is sort of overdue. A lot of reasons to be concerned. Whenever we get near holiday time, everybody has a lot of anxiety about, this is what usually causes the shutdown to potentially end in most times, is worry about transportation during holiday time. So I am optimistic that that will happen. It is encouraging to see that, a few of the Democrats have broken from rank and are now set to vote positive. And so I think, the vote should happen sometime this week, in my view, and that should help to continue to, I think, carry the market higher at a time when it was probably a little bit concerned about the future of how this would all play out.
Yeah, technically day 41 of this government shutdown. Thanksgiving week just 2 weeks away.
Right.
We know always historically a very busy time of the year for holiday travel, that is. In terms of sectors that are outperforming, underperforming, any sort of sector rotation, as we look toward year end, obviously AI has been a big play since those April lows, but we've started to see some froth, as market watchers would say, come out of that sector.
I think that's right. I think that we need to see the broader market really play catch up. It's really just been technology in the last couple months, and that is a little bit of a problem. When you only have tech working and the broader market is largely unchanged from July, we want to see other parts of the market start to re-engage. Healthcare and energy have been two notable exceptions that have been able to push up, and a lot of that I think has to do with just mean reversion. Normally as you get towards the end of a year, you see some of these lagging sectors start to bounce. Some of that could have been an optimism on the healthcare sector about the ACA subsidies. We know that those likely are not going to be included in the bill. So we might see a little bit of a weakness now in healthcare after this big sharp bounce that we've seen. Energy also, I'm not that optimistic really between now and year end. I think the supply-demand picture favors crude going lower. I like technology. I think you have to still stick with tech. It had a little bit of a pullback. Financials are also an area that I'm sort of keyed in on, and industrials and utilities still look excellent. So I don't really have any issues with trend. Technicals have not really changed. It's been more short-term deterioration. We still have a level of people being uncomfortable about the economy and about the market and the plan for these coming rate cuts and how they're going to proceed. So all that wall of worry is actually still pretty good for the stock market, I think, between now and year end.
Interesting, and I'm glad you brought up rate cuts, because now in day 41 of the government shutdown, which is today, we have seen federal data on hold, right? We haven't been getting the typical monthly jobs report nor the inflation data. And many have noted that that has made the Fed more divisive in the path forward for interest rates, even though I think markets are still pricing in a 0.25 percentage point rate cut come December. How does that add to potential volatility in the market?
Well, I think it's always wise not to pay attention to the Fed, honestly. You want to see what Fed fund futures are pricing in for rate cuts. And so we still have about a 70% chance that they're going to cut rates in December. You could look at it both ways. You could say, one, the fact that there's no data means the Fed's going to take it a little bit cautiously, but the private data we got last week on the economy was actually not all that great. Instead, we are starting to see many more job cuts. So I think, if anything, the Fed would still lead towards cutting in December, and we have another two between now and next fall after this year. So I think it's a wonderful environment at a time when the economy is still largely holding up much better than anticipated. Has largely ignored a lot of the tariff worries, and earnings have come in great. Technology with the AI spend is very much with us. I think these are all positives that point towards a very robust, December rally. As we get into next year, we can talk about that, and we need to see the market play catch up. And if that doesn't happen, if it's only tech and people start to get more optimistic, I would be a little bit more cautious, I think, for the first half of next year.
Yeah, it does seem as if it's the inflation data, right, for the Fed that has made some of these members a bit more divisive on the path forward, or unclear, if you will, knowing that we have seen some of those job figures that you pointed to, at least from the private sector, give us some insight into the state of the overall jobs market.
Yeah, I mean, inflation has always been a partisan issue, right? So all the Democrats think there's more inflation and the Republicans think there's no inflation, and the answer is usually somewhere in between. So it's really difficult to really have a feel. I think that China, we know they're going into more of a deflationary environment, and that's a concern. If anything, they're exporting deflation now across the world. So that's going to help to sort of offset any inflation worries. We also know the AI story is also still very much a deflationary story. Crude oil, if it gets down to the 50s, also will combine. So I'm not worried about inflation. I think the Fed can go ahead and continue to cut, let the economy run hot. There's plenty of factors that will offset inflation, I think, in the months to come.
All right, Mark Newton, Head of Technical Strategy at FundStrat. Thanks so much for joining me in studio.
My pleasure, Kristen. Thanks.
Great to see you.
Yeah, you too.